All right, so in the silver level, I want to take only one aspect of it, which is state of a trader. So what is state of a trader? Okay, so in the financial markets, several key factors distinguish a profitable trader from a gambler. Okay, so we have two sets of people in the market: those who gamble and those who trade profitably. Though they are all financial traders, one of them is just gambling, all right? On the other hand, we say he's just hoping in the market everything will be fine. The factors that distinguish a pro trader from a gambler include the following. The first one you can talk about is analysis and system, that's strategies. The next thing is risk management, of which in Blue Profit we call it CRTU management, all right? And discipline, knowledge and education, investment term perspective, and then emotional control. How does a pro trader differ from a gambler based on emotions? All right. So we can say that a profitable trader, which normally we call pro trader, approach the market with a systematic and disciplined strategy backed by a thorough analysis and risk management play rule. So if you are a gambler, you just enter the market, you tend to rely on more lucks. In the Forex market, we say hope is for the hopeless and luck is for the fools. Sorry to say this, but that's the truth. If you hope in the market everything will be fine for you, you are hopeless, because in the Forex market, it is not backed by hope or luck. It is backed with a systematic approach. You understand? So once it's a systematic approach, if you don't have what it takes to enter the market, you stay off. Don't go there and waste the little you have. If you have, let's say, $1,000 and you think you can deposit in the next 3 months, you can get 100% of it. Please, sorry to say this to disappoint you. It's not going to work if you don't have a systematic approach. So moving forward, we can say that they only take unnecessary risk. They don't even understand if $50 account cannot trade a certain assets, all right, or security. They don't even know, so they can just put any trader on any loss side. And when market brief on them, all their instincts, their mind change, adding themselves to those who are saying forex trading is a scam. All right, so I don't want any one of us here to be saying that forex trading is a scam. You understand? So take it as if this is something your life depends on, and you need to take your time and decode it very well. You understand? All right. So you say they lack strategic and disciplined approach that characterizes successful trading style. Right. So moving forward, we can also talk about analysis and strategy. So a trader engages in a thorough analysis of market condition, all right? It's really important, and relevant information. Develop and follow a well-defined or predefined trading strategy based on research and risk management. The research in this case, taking some time to understand the condition, the criteria that strategy used to work, the psychology behind it, and risk management. Then you have a preset of it. That one is going to help you to have an edge over the market. You understand? So every strategy has to have an edge in the market. A strategy that doesn't have an edge in the market in the long term will tend to blow your account. You understand? Yes. So the gambler rely on more chances or luck without systematic analysis. Decision making is often impulsive without a proper and structured approach. So when they feel like they enter, that's impulsive decision making. When they wish, when they hear somebody saying, oh, gold is going to buy, they also enter and go and buy some without even knowing when to buy, where to put your stop loss, where to put your trading targets. So this is how gamblers operate in the market. They operate without an edge, all right? They don't have any statistical edge that proves their trading success. Theirs is luck, is hope, all right? So the next thing is risk management. A pro trader implements effective risk management strategies to protect capital, all right? Set stop loss orders, diversify their investment, and understand the potential downside of each trade outcome as well. So last time I was saying, or I was telling you that every trade outcome is independent on its own. You can have 10 winning streaks in a row, yet the next trade, which is the 11th one, is an independent. Its outcome is independent. It doesn't rely on the previous outcome. You can have as many losing streaks as possible, but the next trade, whether it's going to be a win or loss, it's independent. Like the outcome is actually independent. So a gambler often ignores or underestimates risk. They think risk doesn't matter. Pull a trigger, this is 0.5 or one lot, boom, and then it go your direction, one or two, then it retraces, and then your account is $1,000. Now you are having $200 down, going to 300, 400. Then you hope, because you are a gambler, you begin to hope it will come. Let me add another position so that when you return from here, I'll get a lot of money. Forgetting that the more you add position, the more your margin level reduces automatically. The trade can close without even your consent, and then you end up blowing the whole account. So every trader have to know that risk management is very, very key, but gamblers ignore them. They do everything on their own. And these are people, when they win a specific trade, the whole world will hear that they have won a trade. All right. A pro trader knows that in the long run, if I pick 100 trade and even I win 50, I lose 50, I am still leading the market at a specific percentage, because that pro trader have what we call a statistical edge in the market. Next, we can talk about what we call discipline. So a pro trader are there to discipline approach, sticking to their trading plan. Even in an event of losing streaks or setbacks, he or she learns from both success and failure, continually refining their strategy. That is a role of what a disciplined professional trader. Now, a gambler tends to act impulsively, driven by emotion and short-term excitement. He or she may chase losses or deviate from predefined plans, jumping from one system to another, what I usually call the cycle of doom. I have strategy A. Every strategy have a specific period of winning, and when the losing streak sets in, that's where we intend to limit even our risk per trade. You understand? So when it happened that way, a gambler will jump from that strategy and go for a different strategy. You win one or two, three trades, and then the losing streak sets in, you will jump it and go for another one. So you see that maybe the time you get to the third strategy, that strategy has started with its own losing streak. By the end of it all, you are going to blow every account. And then you say forex trading is a scam. Cycle of doom. This means that every strategy has its ups and downs. You have to know when it's working and when it is not working, so that you can do your due diligence when you have to go in and when you have to stay out of the market. So knowledge and education. In knowledge and education, a pro trader invests more time in acquiring knowledge about financial markets, trading strategies, and economic indicators. He or she may engage in a continuous learning and stay informed about relevant news. He or she may also seek mentorship or purchase a new course to improve on his or her hot skill, which is very, very much important. But a gambler, they rely more on luck again or intuition, and may not even invest in necessary time in understanding the underlying factor influencing their trade. They don't have time. When they lose, they just move on. When they win, excitement, they just move on. Any trade I pick, after every trade, every Saturday, I need to review all the trades I picked during the week. Why did I pick this trade? Did I follow every plan, every rules that I have set, all criteria? Did I follow them? If not, why did I do that? And then I'll report to my own self that once I didn't do well. And the ones that went well, if I follow every plan and it went well, what was the factor? Was there any news? Was there any geopolitical tension that really had influence on that particular asset or that particular trade? And then the ones that went well, I'll also do the same diligence to know why it also went well, so that I will be able to keep to the winning strategy. All right. So moving forward, we can talk about investment term perspective. A pro trader focuses on sustainable and consistent profit over the long term. He or she recognizes that short-term fluctuations are part of trading game and remains committed to their overall trading strategy. All right. A gambler often seeks immediate gain without considering long-term sustainability. He or she may be motivated by excitement of the short-term wins or losses and end up increasing their risk per trade, which is like you are putting more salt in already made soup. At the end of the day, things are not going to turn well. Okay. For this, I received one offer from one broker. All right. And then in Australia, they wanted me to promote their brand. So I looked through their every document they gave me, and then I realized that their commission plan was really high. Okay, I think every lot that your referral trade, you should be getting somewhere $27. Okay, so if I refer, let's say, Mr. Justice, and then Mr. Justice trade up to one lot, the company pays me $27. So I read through there were about three generational something. So in if I have a circle of three, at the end of the day, every lot I'm gaining about $50. So in the meeting, I told them that the system is not sustainable. They said, well, look at the rebate we are giving you. Look at the commission plan, everything. I said, no, I cannot put my student at risk. All right, I cannot put my student at risk. Why am I saying this? The bigger your rebate commission, the higher the spread your traders are going to incur. So if everybody is offering up to, let's say, 1.7 per every high volatility level or low volatility level, you are going to experience like up to 2.7 or 3 pips as a spread, and then you pay. So immediately you open a trade, though you should be in losses, but yours is going to be greater. And sometimes your position will be closed before it hits your TP or your stop loss. Why? The spread is higher and it will get there to close before the actual price gets there. So I explain everything, then I say, okay, we will look through and then we see. And later they can say, no, I cannot work. Why? You are not sustainable. These are people who come in with very good promises and then in few time they are gone. All right. So this is how some of the gamblers behave. They are looking at short-term excitement. Some people will go and then promote this broker, forgetting about tomorrow in the next 2, 5 years, 10 years, 20 years. Where will be your stand? All right. So you have to think about long-term perspective instead of short-term. Emotional control. So a pro trader maintain emotional discipline and avoid making impulsive decisions based on fear or greed. Okay, he or she may embrace what you call losses as part of trading process and stay focused on their long-term goals. All right, but a gambler on the other side is prone to emotional highs and lows, leading to impulsive decision making. He or she may become overconfident after few wins and then demoralized after few losses, which in turn may even quit trading. All right, so in summary, a pro trader and a gambler's decision making are based on the following. So you can see that pro traders trade with proven strategy with a statistical edge, and gamblers have no strategy, trade with prediction and lags. They don't have any data backing their decision making. Pro trader practice a consistent risk management, while a gambler risk management is based on feelings or emotions. Pro traders are emotionally detached from trade outcomes, and they accept wins and losses as part of the trading journey. But gamblers, on the other hand, are emotionally affected with trade outcomes, feel happy with wins and feel bad when losses set in. Okay, so continues to take valid trade according to the predefined rules of the strategy without any hesitation. That is a pro trader. But a gambler takes trade based on prediction and random news and others' opinions and may avoid trade sometimes because of losses, right? These pro traders stick to their trading strategy for a long period of time, even in an event of losing streaks. But a gambler keeps on changing strategy when experiences few losing streaks. So pro traders have a long-term plan to build wealth consistently and sustainably, but gamblers focus on getting rich quick. When you look at this, in a sample of 100 trades, okay, if your average win rate, just as I said, is 54, okay, you risk 1 to get 2, all right? Your risk per trade is 1, your return on trade is 2, all right? When you risk 1%, you are expecting 2%. So you can see that out of the 100 trades, 54 were wins, okay, and 46 were losses. And then, so our win rate is 1:2. In this case, 54 is our win. We multiply by 2, that's the outcome of wins. That one is going to give us 108. And then 46 losses, multiply by -1. That's when we lose 1, giving us -46. So in this, we can see that when you do the calculation, you have 62% return on your investment. That's when you follow every rules consistently. This is what is going to happen to you. You understand? The next thing we have to talk about is building a profitable trading system or strategy. Okay. So what is a trading system or strategy? A trading system or strategy is a structured trading tool that consists of a specific predefined set of rules or criteria, can be based on fundamentals or technical or even both of them, that gives the trader a statistical edge over the market. So there are a lot of trading strategies out there to be traded and benefit from, but only best system for you is the one that defines your edge in the market over time. All right. So your system or strategy must include these three main criteria: your entry rules or conditions, exit rules or conditions, and then the CRTU management play rule. So these three things are what defines an edge in the market. Okay. So you can see that in Blue Whale Profit, we have 4 solid strategy or system that works in almost all market conditions, whether up or down, trending or ranging. All right. For all kinds and types of traders, according to their trading style, this strategy will actually work for you. Without trading strategy, a trader trades in vain, because in the long run, he or she may blow accounts upon accounts. So some of our profitable trading strategies include these ones: the golden eggs, of which I have mentioned. We have what we call the eagle eye, that's 1 to 4, all right? And then we have the ESTC, that's the eagle eye strategy, trend continuation. And then we have the cash out strategy. Say that all students and mentees of Blue Whale Profit benefit from all these strategies. All right. So this is the end of this presentation. I will quickly show you the real state of a trader. And this particular session, I think it was recorded in about 2 years ago. All right, so secret to consistent profits. We say that one of the popular ways to invest in the financial markets is by trading the Forex markets. Okay. This method of investment offers traders opportunity to profit from fluctuation, that's rise and fall in the markets. That's the currency markets. Okay. So forex trading can be challenging and complex endeavor, but there are certain secrets you can actually follow to increase your chance of making consistent profit, regardless of your trade outcome. So this is where psychology starts playing. So research has clearly shown that about 95 to 97 of people that trade the forex market lose money. So you wonder why it is so, right? Because we do not approach the market with the right mindset. Mindset is everything when it comes in terms of what? Trading. If you don't have the right mindset to trade the forex or the financial market, I bet you cannot do well. All right. The mindset of I want to get rich, I want to get this, I want to get money and show this person this. No, you can never make it in the market. Have a neutral mindset. All that you need is that you are doing the right thing. It's a job, it's a skill that you are learning to make your family better, to better your own life, but not to show off to anybody, or not to make very quick money, or make become rich overnight. No, it doesn't work that way. All right. So you may also ask yourself that these traders, whether they don't have a trading plan, have a proven working and trading strategy or system, stand technical and fundamental analysis, they use proper risk management, they practice patience when in position, they keep journals, learn from their mistakes, but at the end of the day, they have all this. So why is this about 97% are still losing money? If the answer is big no to all the above questions, then why the huge losses in this regard, forex markets? Okay, the first thing you have to understand that traders do not have a statistical edge. And I'm talking about an edge. It's something which is very, very serious. If you know how to calculate your edge, you understand why you should not even trade or why you should trade. All right. If you are a break-even trader, what does it mean? It means that you can never make any good money in the market, because at all costs you come back to break even, and most anytime you come back to break even. What does it mean? You need to change the way you trade, your style of trading. All right. You have to know your risk appetite. Right. So a statistical edge is nothing more than an addiction of a higher probability of one thing happening over another in a very long time or period of time. Okay, so most traders think having the best trading strategy is all that matters. No, the truth is wins and loss in the financial markets is based on mathematical and probability methodology. That is the random outcome for wins and losses. So if you have this right mindset or concept that the wins and losses are based on random outcome, let's take it for instance. When you toss a coin, the probability of you getting a head or a tail is 50-50. But what will make you a very good winner in that tossing a coin is to toss it as many times as possible. So for instance, when you toss it 100 times, you know that at least you can have 50-50, 50 head, 50 tails. But in this case, you are having one as your risk. When you toss you have risk what? 1. But the outcome is 2, all right, or 1.5 or 3, all right? So if that is the case, it means that even if I get 50-50 outcome and then my risk is 1 and my outcome is 2, it means that automatically I am still a very good trader. This is all that matters. This is all that we are trying to say about a statistical edge over the market. So as a professional trader, you need to have an edge. So when you test your strategy and then you are having, let's say your win rate is 32, it's 43. You can still become a pro trader, but your risk to reward ratio have to be higher. You have to be aiming like 1:4, 1:5, 1:6, 1:7 and above. Like yesterday, we had what 1:10.2. And one trade, when a better trade happens, you are in for about 1:10. That one you are good to go. Even if your winning rate is even 30, you win 30, you lose 70%. You can still become a very good trader. But your aim is to get only 50-50. Use this as a game of chance. But as you master the market, you see that you know that, no, this area I need not to pick a trade. And then that will all help you to become a professional and disciplined trader. Right. So maybe you can see that if you consistently lose money upon all your plans, strategies, etc. in a long-term play, it's a clear indication that you do not have an edge over the markets. All right, let's consider this. As a trader, you need to equate and trade like how many game of chance is played, okay? Whose outcome is always 50-50. That 50 wins, 50 losses. Though the outcome is 50-50, you would always make money in the financial market. The reason is that your average win rate is more than your average loss. Assume you risk 1 on a game of chance, but you lose 1 when you are wrong and you win 2 when you are right. The question is, wouldn't you rather choose a game that when you win 2 than to a game when you win 1? That's the concept, okay? So let's consider this. A long-term play is analyzed here. We have our capital to be $1,000. We have our risk, which is 1%. So in this case, it's $10, okay? And then risk to reward ratio is 1:2. Number of sample is 100. That's number of trade. The outcome is 50-50. Let's see what happened. If your starting capital is 1,000, all right, this means that mathematically, or your statistical edge is given by the formula profits and loss, okay, is equal to your average wins times your percentage risk minus your average losses times your percentage risk. All right, so in this we say that an edge or profit and loss is equal to average wins times your 2R, okay, and your average losses times your risk, which is 1R. What do we have here? We have 50 outcome times 2 times 10, all right, giving us its equivalent what calculated to 1,000. And then your average losses, which is 50 times your outcome when you lose, is 1, okay, multiplied by your risk, which is 10, giving us 500. So even with this play, when you pick 100 trade, you know that you are getting what? $500. And this is not magic. It's something that when you follow your trading plan, it happens. This only thing that gives you an edge over the market. So if you don't have this, I bet you can never become. I'm not saying this to discourage you, but I'm saying this to encourage you to find an edge in the market. Forget about the money. Get the concept. Define yourself well. Get the skill. Be well equipped in the market and see whether you are going to be a gambler or a pro trader. So this shows that in a long-term perspective, you have a positive result in the financial market, which is very, very good. Okay. The second thing we can talk about is how traders think and react whilst in position. All right. Some people think that when they are in position, even their wife, their children shouldn't come near them because they are trading, which is wrong. I open position, I sleep. All right. So it's something that you have to do over and over again to help you overcome. All right. So when you are in position, forex traders hate to see losses in their trading journey. Losses are also part of the game and you cannot do away with it. All right. You can only minimize it. You cannot do away with it. You can only minimize it. So how do you minimize it? Forex traders begin to think otherwise when losing streak sets in. They may believe even that the system they are using aren't working or they are not performing well. For this and other reason, they begin to trade against their plan. Oh, support and resistance is no more working. This moving average is not working. Let me change it. If it's 10, let me change and use 19. If it's 50, let me change and use 21. I think that one will help me better. No, stick to it. You choose to use a specific condition. So stick to it, but test it. Even if it works on only a single pair or asset, stick to that asset. In a very long term, you are a very good trader. You understand? So they begin to look for holy grail. In this market, we all know there's nothing like holy grail. Everything you have to work for it, all right? Forgetting a trading system will not work or perform magic until it's been consistently been in use over a long period of time. So the reason why you backtested, you didn't use only 3 months to backtest, but you used about 5 years data to backtest, that you are looking at the long-term perspective. Should you follow that same trend, what it's likely to be your outcome? That's the reason why we do our backtest. You understand? So they pull or push away stop loss orders down and then up, hoping price will fall or rise in their favor, which is very wrong. If you are losing, the best thing you can do is to cut loss. When you get the right knowledge and right resource, it helps you to leverage on a lot of mistakes. You do away with a lot of mistakes. Okay, but for the losses, we cannot do away with them. We can only what? Minimize them. Right. So don't push away your stop loss. Don't remove them thinking it will go. No, we don't do that. But rather, you just need to follow the rules just as it is. And the market will reward your effort in due time. All right. So let's say that you have newly developed or purchased a trading system, and in your first 4 trades, you are down. Would you react on the next trade? Most of the time, yes, it do happen because you are trading like you are using your emotions to trade. But yesterday, I showed you a simulation tool. You can have a very long series of or streaks of losses. Yet you have to keep on trading. You have to keep on using the same criteria you have jot down or you have outlined for your trading. All right, so let's take note of the following. How using two traders, John and Davis, how they performed in the market using the same thing. So below are some winning trades took by John and Davis at the same time, but their outcome differ due to their previous 4 constant losses. So they all, let's say they are all being fed with the same source of signals, okay? They enter and one will think, no, this trade it will not go well, I'll close it. So this is how actually the whole system work, okay? Let's take it this way. So at the end of the day, when you look at the outcome here, this is John's results, okay, over 100 trade sample. We can see that out of the 100 trade, John, let's say is 34. John won 20. The losses were 14, which is a very good win rate, okay? Very good, very, very good win rates. But at the end of the day, when you look at even from this end, so when you look at this, the first 4 losses, if you compare this one to 1, 2, 3, 4, 5, 6, 6 wins. By the end of the day, look at the outcome 0.3, 1.2, 0.75, 0.3, 0.4, 0.8, which when you calculate all these, it cannot amount to the first losses. All right. So they don't comment. In the comment section, you not see anything there. They don't comment, they don't do anything. It's just there like that. Okay. No comment, nothing. Why? They have lost previously. So that instinct is still even in them. And you can see here how they even went about holding a trade due to wrong practices, losing about 2R instead of 1R. Here, 1.4R. Here, they lost even 3R, which is very, very wrong. That's due to wrong practices. Pushing your stop loss away, hoping it will return. By the time you realize, you have lose big time. Okay, so let's look at the results of John. Okay, so out of the $1,000 account risking 1% risk reward ratio, John risked 1.486 to 0.795, which automatically, to me, when I see this, John is a losing trader. He can never become a profitable trader. That's what it simple means. But let's go on. Out of the 34 trades, John he had 20 wins and 14 losses, which indicate that John has a very good winning rate, which is 58.82 win rates. Okay, so this is how you calculate your win rates. At the end of the day, the win rate is equal to the number of wins over total sample size, that's the total trade taken times 100. 20 over 34 times 100 giving you 58.2. But we can see that though it has a very good win rate, but the trade outcome was very poor. So this is how emotion can affect your trading activity. You can hold a losing trade for a very long time. By your means, when you get $1, you close. But when you're losing $5, you still hold on to it. You get $3, you close. But when you're losing $7, you think and you hope it will come with forgetting how to read the chart. The whole system, the whole chart, the price has changed, yet you are holding on to that losing trade. So that's how it is. So when you calculate the edge of John, you can see that automatically John will blow account upon account, because negative 14.43 R times 10 will give you negative $144.3 negative. So no matter how best you try to fund John will keep on losing, because he doesn't have the emotion aspect, doesn't allow him to pick trade. All that you don't want to see is the losses. Okay. And this is a result of Davis, how his sample also happened. All right. So with this, you can see that he followed every trade just as it has been ordained. When losses are there, because they were all taking the same trade. Okay. So out of that particular 34 trade, he took the same thing. All right. Following almost every rules in the trading journey, according to he has what plan. When he win 20. When he lose $10. So we can see how that one also happened. So out of this, he also have the same win rate, 58.82, and then his risk reward ratio was 1:2. All right. So in the long perspective, when you calculate for David, you can see that he had 76.46%, which indicates 764.60 cents. Okay. So even with this, with the $764.6, it's a very good money following or trading like a robot, allowing not your emotion to affect your trading journey. Just focus, being disciplined, and take action when there's a need. All right. So this showed that in a long-term perspective, Davis will continue having positive results in his trading career. Thank you very much for all of your time. So Mr. Justice, if you're one, you can take over from here if you have any questions to ask.